we're back by popular demand. I'm sorry we don't announce each Monday what we're going to do the next Monday, but we're never quite sure whether we should do it again. But during the week, we get so many questions. And I'll tell you what, they've carried right on through the weekend here. And we just decided last Wednesday we're going to do this again, and we're enjoying it. We got some extra special guests this time. Thank you for joining us. One of the reasons we're doing this is because we run HR for a whole bunch of companies, and all of them have different needs and different questions. And we started writing policies for them back in February. And as the pace has picked up, so have the questions. So we just thought, let's get us all together. We hope it's very helpful for anyone that signs on, and let's get on with it here. I said we had some special guests, so you all, many of you know me, but we have Jim Morris. He's an attorney. He's been on the past 2 calls with us. He's done a super job. I've never given him too much of an introduction, but he has his undergraduate and a master's degree in public administration, and he's got his JD from the University of Kentucky. And he has been helping companies for 25 years. And he practices not just in Kentucky, but he's also licensed to practice in Ohio and Tennessee and Georgia and Virginia and Texas, Pennsylvania, and the District of Columbia. So he's doing stuff all across the country. We selected him to help us because he was so far ahead of other people, because he had clients who were having problems in early March, and he started sifting through things and learning all the laws. And so just a super guy. We're glad he's on here, and he'll be jumping in just a minute. We also have Andy Barr back. Andy, we so appreciate your being here so many times with us. Is somebody saying they can't hear? Is that what's happening in the background? Well, I'm going to press on here. Andy has a super background. He's been our congressman since 2013, working in Washington, sits on several important committees, including the Veterans Affairs Committee and a variety of others, banking and so forth. So Andy, we're just really glad you're here. He's going to be speaking first on the list. Many of you know Allison Petrie. She runs our managed outsourcing for Hanna Resource Group, and she's going to be fielding questions. She and Autumn have been collecting questions for a week, so we've got a lot to cover. And then we're going to wrap up our conversation today with Gregory Hood. He's a doctor in Lexington, and I'm going to give you more about his background as we get to him in just a little bit. So let's flip to the next slide. Just a quick outline of what we're going to cover. I'm going to start out with Andy Barr, Congressman Barr. Then we're going to talk about loans under the FFCRA and the CARES Act. And we've got a lot of your questions already in, but don't hesitate to check on the bottom of the screen. You see the chat box. You can put questions in there. I see somebody's doing it right now. And we're going to talk about the DOL and the agency guidance for employers, which changes daily. And then we're going to wrap up with Dr. Gregory Hood. So should be a fun time. We're going to pack these 2 hours. Let's keep it rolling. And we're ready to pitch it over to Andy, I believe. Andy, are you with us?
I don't think he's on yet.
Oops, okay. Well, then we may slide by Andy for a minute. Let's jump into risky business of the loans under the FFCRA and the CARES Act. The good, the bad, and the ugly. Jim, take it away.
All right, so good morning, everyone. I know that we've been covering this as we go the best we can. Understand that every time we meet, there is new information that comes out and is available. Even this morning, there was a new update. Last night, there was an update. So it continues every single day. On the good, the bad, and the ugly, the FFCRA and the CARES Act were designed to assist businesses through the COVID-19 crisis, but there are some little glitches in there that you need to be aware of. You've probably heard some of the issues with regard to the banks and so on. We'll be covering that, but there's also some provisions in there that they're not negative per se, but you need to know what you're dealing with if you apply for any loans, because if you do, you're stuck with the consequences. So Some of the plans are really extremely helpful. We're going to cover first the helpful part, and then we're going to go back and we're going to address some of the nitty-gritty details to be concerned about. The vast majority of those are for mid-sized businesses between 500 and 10,000 employees. Those are the ones that those people are going to want to be extremely careful in accepting the financial assistance. So it's what I put on here is buyer beware. You just need to know what you're getting into. Not that you won't do it. Some people may not have a choice, but you need to be careful. So let's start with the PPP, the Paycheck Protection Program. A question was asked is, what is the Paycheck Protection Program and how does it affect my business? CARES Act created the PPP within the Small Business Administration, but the PPP is not solely administered by the Small Business Administration. You can go to any of the banking institutions, brokerage firms, and other financial lenders. The list is growing. Unfortunately, I've heard from a client recently, the central bank is not yet approved, and that's created a lot of problems for a lot of local companies. Hopefully that's changed this morning, but I know that they were trying to get things up and running. The other concern I've heard is that there are issues with regard to if you don't have a banking relationship with the bank, they're ignoring you. And that's an unfortunate side effect of this. Some of the lending institutions have indicated that this is simply not financially worthwhile for their time. I think that the government tried to make it worthwhile, so hopefully they will realize that it's not a problem, and hopefully they'll also realize it's important to start a good business relationship. So keep trying or keep expanding. The applications are all the same. The applications have changed every single day over the last week, but they're all supposed to be the same. Every time the guidance comes out from the Department of Treasury, the Department of Labor, wage and hour, it changes the application because they are all working together on this, and it's taken too long to get it rolling. The CARES Act created this. It's calculated as 2.5 months of monthly salary up to $10 million. It's available from February 15th through June 1st. The interesting thing or the important thing for businesses, it is 100% guaranteed by the government. In the past, if you go for a loan, they want personal guarantees. Shareholders have to assure the payment, repayment plan, and so on. This has 0 personal guarantees. It also defers payments for from 6 months to a year so that businesses don't have to start paying it back. Those are 2 huge things in this. The interest rate is capped at 4%. I didn't put that in here as in last week's, but interest rate capped at 4 with 100% of the amounts loaned being with no personal guarantees is pretty substantial. This is the part you need to be aware of. It is limited to only $349 billion, first come, first serve. Now, a lot of people look at that and they go, $349 billion. Well, there are 30 million small businesses, and this also goes out to other closely tied small business, medium size with certain exceptions above 500. So this is something where you need to know the level of money that's available. If you don't think you're going to need this for a couple of months, start the application process now. Do not wait until you're in need because it takes a while for the process to go through. The covered loans. We covered a little bit of this last week, but just so that you're aware, it is used for payroll support. Guidance this week has expanded that to identify specifically what that means. It does include sick, medical, and family leave, including the EFML-EA. It covers costs related to group health care plans during those periods of leave as well. So it's all of your payroll and your health care, medical leave, sick leave, etc. It also covers salaries, commissions, and other compensation up to $100,000. Any amounts over that are not going to be refundable. you'll have to pay those, or I'm sorry, forgiven is the word they use. You'll have to pay for that on your own. Interest on mortgage calculation. Now, this is where they also provided additional explanation through the DOL and the Secretary of the Treasury and so on. It does not include your principal payments, and you can't prepay, you can't additionally pay. It is your interest on loans, but this also is not just real estate. So this is personal property. If you have machinery, if you have a copier, if you have a leased equipment, owned equipment, and you've taken out a mortgage, if you have vehicles for your business and those vehicles have a loan on them or a pay over time, all of those are covered. Interest, not principal. And it also covers utility payments. Then the last thing it covers is any other debt obligation incurred prior to February 15th, 2020. What is forgiven? Well, you heard me mention what would be or would not be forgiven under the PPP loan. The first 8 weeks, so that you understand this, all of your payroll, interest on mortgage, real or personal, rent payments, lease payments, electricity, gas, water, transportation, phone, and internet, which began prior to February 15th. In other words, they didn't want people going out in March or April with the anticipation of this loan being available and incurring additional expense so that they could then get the forgiveness back. So the PPP allows for each one of these to the extent that they have existed prior to the corona or COVID-19 crisis. It is reduced, but it is not increased by a calculation based upon the average number of full-time employees during the months of February 15th through June 30th of 2019, not 20, or January 1st through February 29th of 2020. Seasonal employers are required to use last year's numbers. Other employers are allowed to make their election between the two. So you can take whichever calculation is more beneficial to you, and you use the numerator as the number of employees you have now, the denominator as the number of employees that were the maximum number during that time period, and that's the multiplication of what you get with regard to the 8 weeks. It's also reduced by the reduction in total salary or wages by more than 25% over that 8-week period. So if you had somebody and you cut wages back to $75,000 and they were making $100,000, then this will reduce it by the percentage, and that goes into some of the equation as well. And calculators are available on the DOL website with their frequently asked questions. This is a key. There are two keys here. One I've highlighted and one will come below. So reductions that occurred subsequent to February 15th, 2020, but are corrected or replaced prior to June 30th will not be discounted from the loan forgiveness. In other words, what it was trying to do was reward the rehiring of employees. So if you had 10 employees and you let 3 of them go because you don't have work right now during the COVID-19 quarantine, and you decide then that you're going to remove that person or rehire that person later, you get rewarded by the government. That comes back into the calculation. However, there is an unintended consequence that they have not yet addressed, and that is this. You may lay off your employees now, take the loan, hire them back before June 30th, and get the full benefit, including 8 weeks pay after that date. So this is an unintended consequence. It is not something I'm recommending people take advantage of, because Congress is in the middle of addressing, can they fix this through a regulatory modification through the DOL, the Wage and Hour Division, or any other agency, or is there something else that they can do in a COVID-4, which they're talking about right now, phase 4. If they come up with that, you don't want to be caught in a loophole that says that you tried to do something and they're not going to let you do it. So hypothetically, I could see a new bill coming out. I haven't seen this. I could see one, though, that says if after April 1st, or after you've made application, pick one of those, and then you decided to lay everybody off with the idea of getting the loan, that there's going to be some kind of discount for doing that. So just be mindful of that, but that is an unintended consequence, and when a bill is rushed through as quickly as this was, and it's more expensive than the total economy for the last several years, or the total budget, you're going to have mistakes like this that slip through, and you're going to have attorneys that try to manipulate the situation and do something with it, and that causes them to backfill after the fact. So there's an additional one that we need to cover. This one won't take very long. It's the emergency disaster injury loan. I had some questions, but I wasn't sure how to distill those down, so I just did a fact-based answer. Federal government has established disaster loans in addition to the small business interruption loans. These are the emergency disaster injury loans. It allows those up to $2 million for businesses that don't have more than 500 employees that have suffered substantial economic damage as a result of the COVID-19 from the time period of January 31st through December 31st of 2020. That basically is everyone. So this particular loan has a couple of things in here. First, there's a grant of $10,000. You'll get that money within 3 business days. I will tell you that this weekend I researched it. SBA is used to handling 60,000 loans per year. They had over 60,000 requests in the last 3 days. So they are inundated, they are drowning, and they're unaware as to how they're going to handle it. So if you're having issues, don't give up on it. It's going to take time to address it. Also, the CARES Act had a provision in here that assisted with the EDIL, which is it waived any requirement for a personal guarantee for loans less than $200,000. It only required the businesses be in operation for the time period starting earlier than January 31st, which is a big deal because most SBA loans, all SBA loans, prior to COVID-19 required the business to be in existence for at least 1 year. So that's a massive change. So if you're a new business, you can still get your loan. It also waived a requirement that applicants are unable to obtain credit elsewhere. In the past, the SBA was set up so that people who couldn't get a loan from Central Bank, Chase, P.S.C, or anywhere else could apply to the SBA. Now this is a carte blanche across the board. Anyone with less than 500 employees, go get your loan and your emergency disaster assistance, including the $10,000 free money. The interesting thing with the free money is, I thought it was on here, and I apologize, it's not on the slide. So the EIDL, the Small Business Administration, is to take your word that you have been financially harmed. So you can get this EIDL $10,000 grant, not the loan, the grant, without any other explanation other than I've been harmed. So reach out and get it. Oh, there it is. Allows businesses, I apologize, guys. This is the bullet I was looking for. It allows businesses to self-certify as eligible in order to apply for EIDL advance or grant in the amount of $10,000, which would be provided within 3 days after receipt of the application. So that's the last one I was just referring to. So the buyer beware. What's the catch in accepting these government loans? One that I didn't cover on here, I didn't know how many people it would have, but I'm going to address it really quickly. If you have high-paid executives above $425,000, you agree for the life of the loan not to provide any increase in the amount of compensation. They are frozen at 2019 salaries. If you sever someone, if you're terminating them and you try to put together a severance, severance is limited to the cap of 2019. And that goes all the way up to $3 million. If you make more than $3 million, which probably most people are not on this call, if any of your employees make more than $3 million, then they actually get a reduction of 50% above $3 million, and they can't get a change in salary for the remainder of the loan. This also applies to airlines, and it applies to the mid-sized businesses on the larger loans that we're about to talk about. A couple of other things in here. It requires a good faith certification for all mid-sized businesses. Now, I need to make sure you understand some of these certifications are not just mid-size, and you need to get legal guidance because some of these, the regulations are trying to expand what people are going to have to certify. These are scary, and it was buried in a sub 7 levels low in a statute. So statute had a thing up at the top, said what you'd have to fill out, and then 7 sub-paragraphs hidden at the bottom is a description of what you're going to have to provide. And some of these are frightening if you run a business. So mid-sized businesses must certify, among other assurances. These are the easy ones up front. The uncertainty of economic conditions makes the loan necessary to support ongoing operations. That's okay. The funds will be used to retain 90% of the workforce at full pay through September 30th, 2020, and you will restore all compensation that existed as of February 1st, no less than 4 months after termination of the public emergency. That's a little bit more dicey because we don't know what public, how it's going to exist at the time. So you have to know that going in. That this one's not bad, you just need to make sure you comply. That you're domiciled, organized, and significant assets and majority of employees are in the United States, and that you're not in bankruptcy. Those are two separate ones I combined together because I'm trying to make the slide fit. That you will not pay dividends or repurchase securities as of the date of the CARES Act while you have the loan. That's a big one because you can't pay dividends to any of your shareholders. Here are the huge ones at the bottom. That you will not outsource or offshore jobs for the term of the loan plus 2 years. Now this was thrown in as a union protecting, and the one at the end is a union, massive union protection amount. So this is, a lot of people thought that this just meant, well, you won't send your business overseas. That's the offshore. The part that says outsource, the guidance out there right now is, I'm going to give you the University of Kentucky Hospital and other hospitals in the area. They outsource their food vendor service to Aramark and other entities. Under the provision of this good faith certification, you can't outsource any of your employees, any of your services, anything else to anyone that is not part of your business. Obviously, you can't offshore, but you can't outsource either, and that creates huge problems for any business that has any temporary staffing, any outsourced staffing, any janitorial service, anything. The letter of the law and the regulations to date do not provide any relief from that section. Now, they are supposed to be, and there's not a slide on this, the Department of Treasury is supposed to be putting together regulations by the end of the day today, April 6th, 10 days out from the adoption of the act. They have not yet done so as of this morning. They had some tidbits, but not the full regulations, and they're drinking from a fire hose as well. But this outsource is huge. You need to be aware of it. You need to know that it's not only for the term of the loan, but 2 years after the loan is paid. There's debate as to whether it's the term of the loan even if you prepay, but it appears to be for the term that you have the loan plus 2. The other is you will not abrogate any existing collective bargaining agreement. This is a union protection as well for the entire term plus 2 years. So if you have a union, that union will continue for the full 2 years after the loan is done. It's not that big of a deal because if you've already allowed unions in, you knew that going into the loan. But this does lock you down for the entire extent of the loan plus 2 years. So plus 2. The last one is the kicker. The recipient will remain neutral in any union organizing effort for the entire term of the loan. Now this is not plus 2 years, but it is the entire term of the loan. What this means is neutral is not necessarily neutral. Under the NLRA, NLRB considers any effort to discourage union is an anti-union. That means you're not being neutral. Now, I provide educational teaching to mid-size and large firms, and we talk about what you can do and what you can't do during a union effort. And you can educate, you can inform, but you can't threaten, you can't intimidate, and I do it under tips. Threaten, intimidate, something, and surveil. I've forgotten the P. I apologize. Can't do that, but you can educate, you can inform, you can let them know of examples, things like that. In this situation, if you accept this money, you cannot educate, you cannot inform, you can't even give examples. Indeed, the biggest thing in this is now they can vote by secret proxy instead of a card-carrying vote at a counter where they actually have to vote out in the open. This would allow a secret ballot. You can't question it, you can't debate it, you can't ask for a recount. You're stuck with what the union tells you because that would be a neutral position. Anything challenging it would be non-neutral, and you've given a good faith certification to the United States government that can be utilized by the union effort to demonstrate that you are now interfering with the union. That's a huge change. Those last 3 were added last second by the Democrat push for union protection. This is not a political statement, it's a factual statement. Those last 3 are massively important to understand before you accept the money. So we're at the end of that one, and I know that we may have...
Andy Barr has joined us.
Andy Barr.
And
sorry, Andy, I took too long.
That's all right. It's good stuff to cover. And Andy, I wonder if
can you hear me?
We can. And
okay, Jim, I really enjoyed that. That was a great presentation.
Well,
it's always great to learn about. No, it's always great to get some good interpretation of the law that we just passed. You know, can I just touch on the admonition that you just touched on about the unions, because this was in the construction and in the development of this bill. As you said, it was some last-minute concessions to the Democrats. And I want to provide a little bit of color on that if I could, because I was in some of those calls about those last-minute additions. And there was
I just put them back up for you, Andy.
Thank you. There was quite a bit of discussion, a lot of concern. In fact, the ranking Republican, Virginia Fox, on the Education Workforce Committee or Education and Labor Committee, she strenuously objected to these provisions. And in fact, she may have even voted against the bill. I can't remember. I didn't see. Well, of course, it was a voice vote. So what we all did was we submitted how we would have voted in writing. I didn't see what she ultimately did, but in addressing that concern, which is a real concern, and you're right to bring it up. What the Treasury Secretary said and what our leadership said to us was that those provisions, if you kind of dig down deep into the details of the statutory language, those concessions apply only to the direct lending from the Exchange Stabilization Fund, meaning doesn't apply to the PPP loans. Jim, is that your understanding? That only?
Yes. That's,
yeah.
This is only for 501 to 10,000 employees, and the PPP is for 500 or less. So yes.
Right. So what we're talking about is mid-sized companies here or larger employers. But it only applies for the direct loans from the Exchange Stabilization Fund from Treasury to the businesses. Now, the reason why the administration and Republicans ultimately kind of relented on these demands was because it is the intention of the administration to only use direct lending from the Exchange Stabilization Fund for the airline industry, for the air cargo and the airline industry, and the airlines, which have kind of a carve out, a $46 billion or a $54 billion carve out, along with some critical defense industry. Only that portion of the $500 billion will be direct lending from the Treasury. The remaining $454 billion in the Exchange Stabilization Fund will be backstopped as loan guarantees from the Federal Reserve banks to commercial banks out in the private sector who are Fed member banks. And these provisions relating to collective bargaining and union organizing efforts do not apply in those cases. So where you have a loan that's guaranteed, backstopped by the Exchange Stabilization Fund, none of those union provisions are supposed to apply. And that's why there was this agreement to have that concession on those union organizing provisions. Jim, I'd love to get your take on that, but that certainly was the intent of at least the Republican side of the Congress when we were putting together these final provisions.
Right, and I think as we see this shake out, some of these concerns may not be as critical because they may be getting loans through different sources, but it's critical for them to know to not not go through the process where they have a document that says that they will agree not to do these things unless they knowingly do so. That was the only reason, and I know that right now we're still chasing which loans people are going to get and whether it's going to be direct or indirect and so on. So I fully understand your explanation, and also, as you know, I'm not challenging the reason why everybody needed to vote on this, because you have to take the good with the bad while you're rushing through to protect everybody, and there were things much more important than whether or not union would be involved. So
yeah, we were. I was concerned about that myself, but I got sufficient explanation on that to allay my concerns. I think the airlines were willing to take that medicine with it, and then for other distressed industries over 500 employees that don't qualify for the PPP, I think they can avoid those onerous provisions by getting loans through commercial banks that are then backstopped by the Fed or by the Treasury's Exchange Stabilization Fund. So that's how I understand it. I will give you a little update on the PPP. We've been working through the weekend with the SBA and the Treasury to get Central Kentucky lenders approved and get their loan officers the credentials that they need to log into the E-Trans system. That's been a frustration and a headache for, I know, many lenders out in the community. And if you're a small business that's applied for one of these loans, you may have heard that from some of the banks or credit unions that you're working with. But we're working through those issues, and we had a conference call with the Treasury Secretary on Friday afternoon where we were sharing and communicating those frustrations with the Treasury Secretary. And his message back to us was, send us the list of banks. We'll work through the weekend to get them, get the credentials approved. By all measures, they are working through that queue, and they are getting many of our lenders approved and access to the system. And my understanding from many of our local bankers is that, with some exceptions, many of them are getting through and are originating these loans and pushing out the liquidity. Overall, just as of 11 a.m. yesterday, Sunday, when we got the last kind of hard numbers, there were 23 billion in loans already originated. They were approving at a clip of 1 billion an hour. And at that time, 77,500 loans had been approved. So, it was quite a good clip. And one concern has been, well, this is a first come, first serve. And in fact, the regulation itself says that it's a $349 billion appropriation. And so some are concerned that this is going to be oversubscribed and we're going to run out of money. The Treasury Secretary, and I think my colleagues would agree, many of my colleagues would agree, that we want all eligible small businesses to be able to access this. And so if we need to come back and get more money, we will. I will say, in general, in my conversations with my colleagues, both Republican leadership, minority leadership, and the Financial Services Committee, there is less enthusiasm on my side of the aisle for a phase 4 or a part 4 for this than there is within the majority party, and the president apparently also is very enthusiastic about a phase 4. There is less enthusiasm among Republicans in Congress for a big phase 4 unless we truly run out of money in this PPP, which is quite possible. But I think what we're going to do is take a wait and see approach and see how we do this week, see how this implement this correctly, work out the kinks, make sure we get those small businesses the loans that they need. I am getting some feedback from some local businesses that they're going to pass on the PPP. Some of them are going to pass because there's so much uncertainty on the back end of this. They just don't know if even though if they rehired workers and retain them for 8 weeks, whether or not they could hold them on beyond that. And so we are getting some businesses that are reluctant to take this up, to retain workers or rehire workers only to have to lay them off again after 8 weeks. So I think Congress is also going to be evaluating that and whether or not we need something longer than 8 weeks, and whether or not the program becomes so oversubscribed that we need to appropriate more funds into this PPP. Final point is that we hope that the regulatory relief out there is working, so that if you have, and I want a report back from anybody out there who is a commercial borrower, I'd be very interested to know if efforts to restructure loans, modify existing lines of credit are being well received, or if there's still difficulties in doing that. We made some regulatory changes and changes to financial accounting rules to make that a little bit easier for the lenders to do. And I'm curious if anybody has any feedback or experience on that so far. So let me open up for any questions people might have. That's the update that I have, Lyle.
Thank you very much. We appreciate that. That's good input. And I know you're staying on top of this. It's changing daily. So I didn't get to do your full introduction, but Andy he's a member of the Financial Services Committee. So it's so appropriate that you be talking about all this stuff now, certainly. He's also a ranking member of the Oversight and Investigations Committee, and he's a member of the House Veterans Affairs Committee. So all those are important to our state. Any questions, Allison, specifically for Andy?
So we did get one that we could address right now. It's about the interplay between disaster relief and the Paycheck Protection Program. Someone just asked, if the company receives assistance from the Disaster Relief Fund, up to $10,000 program, can they still apply for paycheck protection, or would that be subtracted from what they would receive?
Yeah, good question. I know Jim can chime in here as well. So yes, the answer is yes, but they have to be used for different things. The paycheck, the EIDL, the Economic Injury Disaster Loan Program, is directly through the SBA, and so I believe you need to go apply through the SBA for that. It does have this neat feature of the $10,000 grant, basically, that can be expedited on an express basis within 72 hours, while your application for an EIDL loan is processed, which will take longer and will likely take longer than the PPP loan. The EIDL, the funding behind that program is much less also. That was in phase one of the 3-phase fiscal response, and we appropriated $1 billion for that as compared to $349 billion for PPP. That can be levered up to about $7 billion is what we're being told. But yes, the answer to the question is yes, you can apply for both, you can get both, but they have to be used for different purposes. The EIDL loan is for more operational or capital expenditures, whereas the PPP loan is designed primarily for paycheck protection for payroll. In fact, 75% of the forgivable portion of the PPP loan has to be used towards payroll. If you do get both, and you get the $10,000 grant on the EIDL, that is subtracted from the total amount that you can get forgiven under the PPP. Jim, am I saying that correctly?
Yes, exactly correctly. That was the only caveat I was going to add, is that it's not in addition to. So if you receive free money under the Economic Injury Disaster Grant, that money is deducted from your PPP forgiveness, because obviously you've already taken $10,000, so you can't take $10,000 plus your PPP 8-week waiver. So that you were precisely on point. And honestly, I feel a little inadequate in giving guidance when I'm speaking to somebody who's actually on the Financial Services Committee and doing all these things. So I appreciate you being here. And if I've misspoken, please jump in and tell me I'm wrong, because there's a lot of information.
You've done really well. Me too.
Thank you.
And me too. You've done it very, very well. I don't know how many large businesses are represented on this video conference, Lyle, but the PPP is really designed for the smaller businesses under 500 employees, as are the EIDLs, and it's the $500 billion in the Exchange Stabilization Fund that's for the larger businesses, and that will operate in tandem with the Federal Reserve System and the 13(3) emergency lending authorities. So it's that 501 to 10,000 employees. Those businesses, they are the ones that will, there's not a forgiveness feature that there is with the PPP.
Allison, any other questions for Congressman Barr?
So we do have a couple of questions. It's mostly about applications, so I'm happy to ask them to Andy, or we can give those to Jim so Andy can hop off. I don't know what his schedule is.
I've got a little bit more time.
Okay, great. Then we have some questions. So someone says their local bank is still trying to get information on administering the loan and doesn't seem to be in a rush. Are there other avenues they can use to apply for the SBA?
Are you referring to the PPP loan?
Yes, sorry.
Now you have to go to your lender. You have to get, and we wanted to do that. There's delegated authority to lenders on this, and we worked through last week with Treasury some changes to the regulations to ensure lender participation, and so the terms of the loan are 100 basis points. So the rate is a 1% rate, and it's a 2-year term. Although the statute allowed for up to 4% and a 10-year term, what Treasury settled on was a 100 basis point rate, deferred for 6 months, and a 2-year repayment, 2-year term. And we also worked hard on, in order to induce more lender participation, a limitation of liability on lenders. So basically all the lenders need to do is they need to verify payroll information based on attestations from the borrower. And the borrower is, on the loan documents, the borrower is making various certifications and of course is subject to the laws of fraud. And so the lenders are held harmless for the most part. They do have responsibilities in terms of gathering, the payroll information and certifying it, but the business ultimately has to certify and be truthful. So it's very important that as a business applicant, that as the lender seeks information about payroll, that you're very careful about the truthfulness of the payroll information that you're providing to the lender, because there are penalties associated with incorrect provision of information to the lender. But we needed to, and the lenders really, in order to participate, they really required a limitation of liability. But bottom line is, if you want to get one of these loans, you got to go to a lender. All SBA 7A lenders were automatically enrolled and participating. Any insured institution, credit union, or FDIC insured bank, all they have to do to become an approved participating lender is fill out a simple form and submit it. And then non-bank lenders can also get certified by Treasury as well. Fintech companies, for example, as long as they meet certain criteria in terms of experience with commercial lending.
All right. Hey, Andy, you are welcome to stay on here. We're going to talk about the DOL and other agency guidance in a minute. As long as you can stay, you're welcome. And if you want to jump in on any of it, that's good too.
Well, I tell you, I'd like to, Lyle, but I think I'm going to have to jump off and do a few more things, but I'm happy to answer any questions as we go along. And let me just end by saying, if any of the businesses out there have any questions or need assistance about any of these loan programs, or if you want to give us some feedback on some technical corrections, if we do have a round 4, at the end of April, don't hesitate to call us. Dan Taylor is my policy advisor for the Financial Services Committee in Washington. The number there is 202-225-4706. 202-225-4706. And his email is dan.taylor, Taylor 1, number 1, at mail.house.gov. And he's authorized me to give that out. And then Anthony Allen, he is helping our small businesses navigate the PPP and EIDL loans, working with our lenders. So if you have any questions about that, you can call him in our district office in Lexington, and that's 859-219-1366, 859-219-1366, or email him at Anthony, ANTHONY, .Allen, EALLEN, at mail.house.gov. And he also is taking those emails from folks as well. So give us a call or an email and let us know how we can help.
We'll include those in our follow-up note to everybody on the call. Thank you very much for joining us. We really appreciate it. Keep up the good work, and we're going to keep moving things forward with all these employers.
Thank you so much.
Thank you, Andy, for joining.
Yeah, best of luck, everyone. Best of luck.
All right, we're going to jump back in here with the next section, part 3, Department of Labor and other key agency guidance. Jim, what do you have for us?
All right, so the past 3 weeks have been crazy. If you look at their website, I'm going to pull it up just so you all can see how quick. This is just the Department of Labor This is not wage and hour. This is not Treasury. This is simply, simply the update from Department of Labor. And if you look at this, since it's been entered, 17th, the 17th, the 18th, the 19th, the 20th, the 24th, 25th, 26th, 28th, 1st, 2nd, 3rd. They have a typo on April. That's not me, that's the Department of Labor. 4th, 5th, and they actually had one this morning. There's a brand new one that popped up this morning. I'm not quite sure why it's not on that page. But that's what I'm trying to keep up with. They are throwing guidance at us quicker than we can figure out what the last guidance truly meant. And that may sound odd, but they come out with some guidance, and it's the attorney's responsibility to come up with what that guidance means. So if you're getting ready to make any decisions, make sure you reach out, get legal guidance, because this is a quicksand situation going on right now. It is very movable, changing, difficult to keep up with, and you can make a decision on one day. I'm literally screenshotting the recommendation on the day that I'm giving it, so that if it changes, I've got documentation that shows the date that we gave it, this was the guidance that we had. It's that crazy. So, tax credits are available. Now some of this is a little different information than we've given before, because they've come out with more clarification. Andy last week talked about this as well, but it's become more crystal clear from the IRS, Department of Treasury, DOL, and Wage and Hour Division. They literally are giving small businesses dollar for dollar payback for the Emergency Pandemic Sick Leave Act and the Emergency Family Leave, I can't remember the E, I'm sorry, FMLEA, including healthcare insurance coverage. The IRS is doing that dollar for dollar offset against payroll taxes. If you can't cover it all based on payroll taxes, they are actually issuing prompt refunds to businesses. You just have to advise them that it doesn't cover the full extent of your expenses. You can request an accelerated refund payment in order to meet your payroll on an as-needed basis. And then I bolded this because it is critical, and there were some questions asked of me before, and the answer was at that point in time, and it was a real answer, we don't know how you're going to get your money back, because right now it doesn't say, but at some point in time, maybe at the end of the year, you'll get your tax return. You may not exist at that time. Now they're doing, you will not have any payroll tax liability for any payments made pursuant to the Families First Coronavirus Response Act, either through loans, through expedited loans, or through your payroll taxes until those are paid off. They have 3 different ways of doing this. Other regulations, these are in my mind, and I didn't bullet these because I want them on the screen for everybody to see, as long as you want to see these and to read through them so that you understand. There were some real unintended consequences in this bill. It was a well-meaning bill, but anytime you rush something through, there's some things that fall through. One of the things that fell through here was, at the time, and Andy mentioned this last week, at the time that they granted this or passed this, nobody realized that it would be a nationwide shelter in place, basically. Now, we're not under a court order, we're not under a presidential order, but we are under, I believe it's up to 43 states are in a shelter in place or a healthy at home or a similar quarantine. Those were not intended at the time that this was passed. So the language was geared toward you or your spouse or your child are at home sick because of a suspected or actual coronavirus, so you have to stay home. That's what was expected. What happened was, it's a nationwide, everybody's at home unless you're in a critical care, healthcare institute and so on. So some of this got undone by regulation. Whether that's constitutional or not, I'm sure some attorney somewhere is going to file a lawsuit saying the Department of Labor didn't have the authority to undo an act and challenge it in that way. But the first part of this is critical. We were asked at the time, what happens if we shut down before April 1st? Do we have to pay this? And I said, guys, be careful, because if you, and women, men and women, everybody on the phone, be careful, because if you do this, they could come after you. They then came out with a directive that said anything that happens after March 18th through April 17th, if you acted in good faith, we aren't going to go after you, but you better act in good faith. So I still said, be careful about closing your business, because I think that they're going to come after us, because that's what's in the statute. Now what they've done is they've said, if you closed your business before April 1st, nobody gets coverage. If you close your business after April 1st, nobody gets business, or nobody gets coverage. If you close your business while people are on leave, they only get leave through the date of the decision to close the business. Now by that, I mean the work site. I don't mean the whole business has to shut down. But if you lay someone off, if you close your business, if you furlough, if you, for purposes of a Corona-19, you are unable, or COVID-19, you are unable to operate your business, this stops the FMLEA and the paid leave. You have an opportunity to shut down the business, send people to unemployment, but they are not entitled to receive the compensation under the act. And I want to pull this up so that you know that this is not just an attorney's interpretation. It literally is off the Department of Labor website, and it is question 23, 24, and 25 on their guidance that has been adopted by the Wage and Hour. At the time, I didn't put it on there the last time because we were still waiting for whether it would be adopted. 23, if my employer closed my work site before April 1st, can I get sick pay? No. 24, if they close it after? No. 25, if they close during? If you close during, you get paid through the date, but not after the employer closes. If the employer is open but furloughs me on or after April 1st, can I receive sick leave or expanded family medical leave? No. So the answer to each one of those is drastically different. And I can't emphasize how surprising it was. It is drastically different than what we were told in all of the statute and in all of the interpretation of the statute. However, we believe that the Department of Labor did that because this is an unintended consequence, and businesses have to be able to close, and they literally cannot have 12 weeks of sick pay / FMLA / caring for a child on that. So it is a huge change. Employees can take, this has been a big question, it's been asked all 3 weeks, there is clarification. So the EFMLA can be taken intermittently if there is a legitimate basis for doing so. The example that shows up most often is a school or place of care is closed. Child care provider is unavailable, but they can get alternative child care 2, 3, 4 days a week, but not on the other. If that happens, then there can be intermittent leave. Typically, you cannot have intermittent sick pay because that by definition doesn't really apply. If you are sick for coronavirus, chances are it's not going to be every other day. It may be 3 days in a row and then you come back and then you get sick again, that's fine. But it's not going to be Monday, Wednesday, Friday, but you can work Tuesday and Thursday because sick pay by its definition is you are sick and you cannot work. Employees cannot use the EFMLA or sick leave to supplement reduced hours. A lot of questions have come in on what happens with a reduced hour situation. Kentucky does have work share. That's what they call reduced hours. So if you're going to reduce people's hours, contact the Kentucky Other states have that. It's different from state to state. Make sure you verify with your state what the laws are on a reduced work schedule. I do happen to know Indiana, and Indiana also has a work share, but they're handling theirs a little differently, so you need to go to the unemployment link for Indiana and read what they're saying. I don't think they've caught up with the real times yet, just a blunt statement. Kentucky's website on unemployment has not caught up, so you won't see a lot of information on work share, but it is there. So what they've been saying is if you're going to lay people off, or you're going to furlough, or you're going to reduce, contact them and speak to them, because they have ways for you to do it in a mass layoff that are a little bit easier than individually doing it. And they have some other guidance, but it's not on their website. Their website, you click on it, it still talks about fraud, and that's their biggest concern. And so they are way outdated, but I'll give them a little slack because they're also overworked right now with everything going on. So a quarantine or isolation order that, sorry, hold on just one second. A quarantine or isolation order, as well as a shelter-in-place order that causes the inability to work, qualifies for the Families First Coronavirus Response Act relief, the 12 weeks of pay at 2/3 or the sick leave plus 10 weeks and so on. However, and this is a big key that they've thrown out as well, if the employer had no work as a result of a shelter in place, employees do not qualify for FFCRA. Again, going back to the first point, that's another indication that if you closed your business or your work site is unavailable due to anything related to this before, after, or even during, or a furlough, there is no coverage, and that is addressed again in another frequently asked question. Another question I've gotten a lot on is this last one here with the bullet point on there, or the highlighter. If a school is moved to online instruction, for example, Fayette County today moved to Zoom instruction this morning at 9 o'clock. Question's been asked, and not one of you asked this, but I've gotten this from a client, and it's brand new guidance as of Friday. If they move to online instruction, it is still closed. For purposes of the FFCRA payments, that is a closed institution. And if the parent cannot telework and the parent cannot come into work due to that, and remember, if you have work available, then they are still closed and they're entitled to their 2/3 of their salary. The other question I have gotten some of, and I hope this answers it, but the medical field is really difficult to explain without going into hour or two of my explanation on the different definitions. Healthcare employees. What is a healthcare employee that is exempt for sick pay and expanded family medical leave? Is anyone employed, and I didn't list it because it literally was an entire page. Basically, it was anyone employed at any lab, any medical facility, any clinic, any hospital, any doctor's office, any medical office of any type or nature whatsoever is a healthcare provider employee that can be exempt from the sick pay and the expanded family medical. The one thing that they asked was, and this is it literally written in the document, in the frequently asked questions, it says, however, the DOL strongly encourages you, do not abuse this to force people to continue to work when they've got children at home, sick people at home, or they themselves. Try to work this out so that you're not making it impossible. I mean, that's literally their guidance. I thought that was odd because typically we just stay nuts and bolts on regulation guidance. This one basically said employers have a heart. If you're going to use this, try to figure out a way to make it so that these people don't get burned out. A lot of questions. I didn't put this into a question and answer format because there's a lot of questions about the National Unemployment Benefits. It's called the Pandemic Unemployment Compensation Program, or PUCP. It allows eligible individuals awarded benefits by their state to receive an additional $600 per week. Every state has their own cap. It's on the unemployment website. You can pull it up. They're entitled to that through July 31st, 2020, and that is for full or partial employment. I went ahead and put the section numbers of the CARES Act on here so that you all could see where it came from. It's section 2104. The next provision allows for an additional 13 weeks of benefits after all other regular unemployment insurance benefits have been exhausted. That's section 2107. Federal unemployment will be provided to employers who are otherwise ineligible for state unemployment. This is huge for anybody who's an independent contractor, a gig worker, a self-employed, or have limited work history. So that basically says everybody who has lost compensation as a result of the pandemic has the ability to apply for federal, even if your state doesn't allow it. Kentucky has lifted a lot of the limitations. There is one caveat. It's not on the unemployment website, but it is on the COVID-19ky.gov. It mentioned on there, when you start to apply, whether you're the employer or employee and you're applying for coverage, you will run up into a roadblock where it says you do not qualify for unemployment benefits. Tell your employees and you as well, finish the application. They can't change that part of the website quickly enough, so it literally says you don't qualify. Go ahead and submit it. You do qualify. They will be providing benefits, so you'll see that. Your employees will see that. It will say right on the page, caution, you don't apply, don't continue, ignore it. It literally says that on the COVID-19 unemployment section. Ignore the instruction. You are still allowed to submit it, and you will get benefits if you have any ability under Kentucky or federal law. Payments from the federal government, I don't know, I haven't seen this yet from Kentucky. My understanding is payments will be split. You will be getting an unemployment check from the state. You will also be receiving an unemployment check from the federal government, $600. They are separate, so don't expect and don't complain, and tell your employees not to complain. They're coming in separate payments. I think that's it on this page. Let me see, let me make sure. Oh, federal government's also providing will temporarily provide full funding for states with work share. Kentucky is a work share program. What that means is, and I did get several questions on this as well, if you are going to reduce people's pay, reduce their hours, contact the unemployment office or have them contact, because, and I didn't get the information because they're not posting it, so I don't know what the percentage reduction is where it triggers that you're entitled to unemployment for the work share, whether it seems to me it was 25%, but nowhere on the Kentucky website could I find that percentage listed during the COVID-19, so I don't know if they've loosened that a little bit and allowed additional benefits or not, but that's the status of the unemployment under the Pandemic Unemployment Compensation Program, and there's a tremendous amount of relief available under the Kentucky as well. So that's it on that section.
All right. We do have quite a few questions about the unemployment and the FFCRA. If you want me to go ahead and weigh in with those.
That's great. Hopefully I can answer them. Everybody understand, I haven't given the caveat today. I need to on everything I'm giving. This is the best I can do with the information I have. I know as soon as Monday last week got done, we had a conference call Tuesday morning, and I told Lyle Monday afternoon, I texted him, and then I told the whole group on Tuesday morning. I said, half of what I told everybody has already been changed. And it's frustrating to me because I feel like I'm giving you wrong information. I try to check right before we go live. Last week, the Department of, Wage and Hour Division hadn't adopted things at the same time as DOL. So I didn't give that guidance. Then the Wage and Hour adopted it on Monday. So my guidance was outdated because of that. So we're doing the best we can. If you need further assistance, make sure you contact a legal counsel that knows this area. Feel free to give me an email or contact Lyle. He's got great resources available, as I think he's proven throughout this, with Dr. Hood coming up as well. But everything I'm answering here is just to the best of my ability, and if I'm wrong, don't yell at me. All right, let's go.
All right, so we have somebody who asked about the $600 additional pay, if that applies for both full-time and part-time employees. And then also,
sorry, go ahead.
Oh, and I was also going to say and they ask what recourse they have if employees are applying for unemployment, but there is still work to be done. Like they have not actually been laid off or terminated, but they think they'll get more money that way than coming to work.
So basically, two questions in one there. Let me start with the federal government. My understanding of the federal government, $600 is for full. And then you'll notice down here at the bottom, the federal government also temporarily provides full funding for states with work share programs, providing benefits to employees whose hours and pay have been reduced. My understanding is that the federal government is providing additional assistance, but it may not equal the $600 plus whatever the state has. It seems to be prorated. There's not a tremendous amount of information out there yet about the work share programs. That was the hardest part of this presentation, was finding what Kentucky is doing with the work share, because there's no guidance on the internet right now, and what the federal government is doing to backfill. They are doing backfill, but it doesn't say to what level. If anybody has different information out there, let me know. But that part of it was really frustrating for me this week, and I do apologize if that's not fully accurate. But my understanding is that 600 is for full termination, not for, well, it does say for full and partial unemployment at the top right here. But my understanding was that they were prorating that. I don't see any rock solid that it's a 600 for partial. But again, that's one of those gap measures they're trying to catch up with. That leads to the second question, which is this. If you have people who are using this system, and this was one of the big Republican, and this is where I wish Andy was on the phone, because the Republican contingent was really upset, especially down in South Carolina. Senator Graham raised huge concerns about this particular issue, because he said under the way that this is written, in South Carolina, they get such good benefits that this will actually pay some of their people more to stay home than to work. And so if you have the ability to fund and you're wanting people to work, and they are going in saying, I need to collect unemployment, you need to dispute that and document. So under the old system and now under this one, they're not entitled to unemployment unless they are truly unable to work and that they've been terminated. So if you're not terminating them, you need to dispute that. And you owe it to the system, you owe it to yourself for the SUTA. You don't want a SUTA hike rate. You don't want a FUTA hike rate. So you owe it to yourself and to the system to challenge that, because if you have work available, show that you sent emails, you asked this person to work, they don't want to work, they're trying to get this because they want the extra benefits. If you can dispute it, I think that you'll have a good chance of the unemployment office agreeing with you, because they are trying to go after fraud. I'm not saying that this is truly fraud, but people are going to game the system if they know they can get more money with $600 plus, don't quote me, $233, and that's more than their minimum wage. Why go back to a minimum wage job? So be mindful of that. Don't cave to it, because there's nothing in here that says that this is not going to impact your future unemployment rates. So I would push that agenda. And I tell you what I'm going to do, because as I'm explaining this, the 600 per week is bothering me. I will follow up on the follow-up questions that we send out. I'm going to cover that 600 federal and see if that's guaranteed for partial and what the explanation is on that, because that's, I've seen both sides of it, but I'm wondering whether that was state versus the feds. and where the cutoff is for state. So Allison, I'm going to follow up with that on after the call to make sure I don't mess that one up.
Sounds good. Okay, and then we had somebody who asked if an independent contractor or a single member LLC who's now eligible for unemployment applies, are they still eligible for the disaster relief or PPP loans?
So are they eligible for the PPP and for filing for unemployment? The answer is that you cannot use the PPP in addition to getting unemployed, but you can use unemployment until you start drawing on the PPP. In other words, the PPP says for 8 weeks, the first 8 weeks after you get the loan, they will cover your payroll. You can apply for unemployment until you get that payroll relief, then pay yourself the 8 weeks, then go back on unemployment and that's what Congressman Barr indicated. There are some people who are concerned with what are you going to do after that 8 weeks? Are you going to allow people to go back on unemployment? Are they not allowed back on unemployment, and so on? The reality is until you get that money, you can lay people off. But keep in mind the calculation. I'm going to do this on the screen live, so let me back up and show you the calculation. Next page. Keep in mind this section here, which is right here. Whoops, it's not going to highlight for me, so I'm just going to put it on a laser pointer. Loan forgiveness is reduced but not increased by calculation based upon either the average number of full-time employees per month during the February through June or January through February, not including seasonal. So if you're a small employer and you get the PPP, and that includes self-employed, gig, independent, if you can qualify for this, and that's where you need to contact your lender. If you don't start paying yourself for the first 8 weeks, you're going to be reduced. So if it's you and one other employee and you don't bring the other employee back, you're going to have 50% of your payroll will only be covered and nothing else. So it's critical for you to bring everybody back that you can as quickly as possible. Whoops, wrong one. Sorry. Next question.
All right. So a company asked if they have two groups of employees, one group who does have enough work to keep them working and one who has no work. The employees with no work would still be eligible to apply for unemployment, correct? It would not have to be the entire workforce that would be.
Oh, absolutely. This is whether you lay off 1, 100, or 1,000. So every employee individually is entitled to the relief under the unemployment and then also the pandemic unemployment compensation program that the CARES Act has as well. So you've got the ability to individually select who can and who can't work. And some of those are coming up, like in the factory situation. You have an automotive factory that's working. The factory workers can't be there, but the emergency personnel can. Office workers can be there, but they're on a scaled back work from home. So in that situation, and that's one that I have right now, we've laid off all of the factory workers. We have told the emergency personnel they still have to come in because if we have a chemical spill, a fire, anything else, we have to have the emergency personnel on site, security personnel, the police, and so on. Then we have the last group, which are the office workers. Some can work from home, some can't. Some don't have internet, some don't have phone service, some do. So in those situations, you do it on a case-by-case basis, each one as to whether they can get unemployment, whether you put them on sick leave, whether they get the family medical leave. And I do want to point out, we've had this issue happen as well, power outages, internet outages, anything like that can cause an intermittent where you have to pay the employee who is ready, willing, and able, and you have work for them to do in a telework situation, but their power goes out. They then have the ability to alert you to the fact that they're staying at home because they have a child they have to care for, or the power's gone out and they can't work due to the work is available, but the coronavirus has caused them not to be able to work because they can't get to the workplace. and their power's out, their internet's out, their phone's out, or something else, they have the ability to then submit for intermittent leave under the FMLEA and the Sick Pay Leave Act. So keep those two things in mind. That's a small caveat that popped up on Sunday, I believe, on a update from the wage and hour.
Yeah. Okay, and we've got some questions about the paid sick leave and the EFMLA. So I'll try to hit those real quickly so Dr. Hood has plenty of time. So the first question is, have you seen any forms available for employers to use for their employees to apply for leave?
So there are some informational sheets not filling out application on the Department of Labor. You're going to need to get legal guidance on the actual forms, because you have to be very careful. And this goes back to 2 weeks ago guidance. If you go back and look at the video or the slides of our presentation, there is a real concern between the ADA and the CDC on what you can and can't ask. And one of the issues that we had, and I mentioned this before, is we were doing temperature screening at a factory. And I was brought in to determine whether or not we could do the temperature screening, who should do the temperature screening, what questions could be asked, and so on. So temporarily, and I mentioned this before, and you need to understand this is only during the COVID-19 crisis, you have the ability to do temporal scanning or other measures designed to get to somebody's illness or lack thereof before they go into the facility. That is temporarily, because normally under the ADA you cannot do any screening that could potentially identify someone's disability. The problem then is, if you get into asking questions as the employer, are you asking a question that you don't want to know the answer to? And I'll give you the prime example. Wow, you look kind of sick. Are you sure you don't have COVID-19? No, I have diabetes and it causes me to be pale, or it causes me to have a temperature. Well, now you know that the person has diabetes. Those are things I typically put in a red folder. I instruct my clients to have 2 different personnel folders. One managers can see and one managers can't see. And the can't see is all medical information, all disabilities, all potential issues with FMLA, so on and so forth, because managers can't have that information. So the person asking the question should not be somebody who can later then utilize that information against you. The other thing is, what we did is we outsourced to our EMS group. They did the screening. They then pulled somebody aside if they had a temperature, and they asked questions that were not written down, that were not part of a personnel, and were not known by anybody in a chain of command through HR or otherwise, so that we didn't have the risk of anybody sharing, no, I have cancer and that causes me, I'm on chemo and that causes me to have a fever, or I have a disability and here's my disability, because we don't have a need to know. All we're doing is screening for a pandemic. So if you're doing these things, make sure you do them carefully. I think that answered that question. Was there anything else in there I didn't?
No, and for the reference of people watching, SHRM has some sample templates, so we've been using that template, adapting it for our clients, and having legal counsel review as Jim recommended, so that's a good way forward. And then another question that we had was about documentation and what types of documentation. I know there's a list on the Department of Labor website of the types of documentation we should ask for. The issue that people are having is that healthcare providers are swamped and then a lot of times unable to provide some of the documentation. So what would you recommend we do in those instances?
So the DOL is completely separate from the statute on this as well. I almost made this a question and answer and I didn't, but I did research it. So the CDC says don't ask the doctor for a written letter because the doctors are busy getting on to the next patient. The DOL says you have the opportunity to ask the healthcare provider for documentation and to ask the employee for documentation. However, don't be stringent about it because of the pandemic and the need for doctors to get on to the next patient. So that's kind of guidance without guidance, but the reality is this. that particular part of the FFCRA is, I think it's subpart C. And that's after the quarantine and after taking care of somebody else who's quarantined. The third section in there was. Hey, Patrick, how are you? Oh, somebody's coming through on their call. The third section on there was that you are needing to be quarantined because you have been diagnosed with COVID-19, and then the sixth section is, or you have an illness that closely resembles COVID-19. So the reason why I'm explaining that is the first two, everyone is under a quarantine. So the third one almost takes a ridiculous back seat. The only time now that I could see that happening is if that employee is working for a healthcare provider, an essential function, or something that's still open, whether it's Kroger, whether it's a gas station or a restaurant with a drive-through. And of course, like I said, all the healthcare. Then you would need some kind of guidance, and you need it on two different occasions. I think if the employee says, I've been instructed to self-quarantine, that instance, you almost need to trust the employee's guidance that they're being. You can try to follow up within the next few days, but don't require it for them to quarantine. Ask them for a follow-up when their doctor's available to send something to you, but don't require it before you send them home, because the 14-day needs to start immediately. Then you need to, and you're going to hear this from Dr. Hood, so I'm not going to steal his thunder on the steps you need to take, but you need to make sure that you don't force them to give a doctor's note before you allow them to start quarantining. The bigger one is when they come back. At the end, when they're asking to return to work, I think at that point, if somebody's gone through a quarantine and you know it was a positive or it was believed to be a positive, before you expose anybody, that's when you're going to need to have a return to work. And again, Dr. Hood has quite a bit of that information as well. So I'm going to reserve further on the medical side, but on the legal side, the guidance right now is a little bit, it's contradictory. There's no other word for it. DOL says you have a right to ask for it, and then it defines who the healthcare professionals are that can give it, and it's basically a physician or a primary healthcare provider, physician's assistant, physician, a nurse, those types of things in a formal situation. But then the CDC saying, don't slow our doctors down, they need to go work. So be careful with, you don't want to be one of those that's stopping doctors from doing their job because you're requiring a note up front. But I think before they come back to work, that's where I would be very careful, because you don't want to expose people prematurely.
Okay, and we'll make this super quick, just a couple of really quick ones. So if an employee has custody of their grandchild, do they still qualify for the child paid sick leave and the EFMLA?
Yes. So really short answer, if you have the ability to claim that you are a guardian, especially if it was court ordered and they have custody, absolutely that covers. The definition of daughter or child is not defined well in the FFCRA, so you fall back to the FMLA on the definition. But they've made it very clear, even those that are older than 18, if they have a disability, that was not included either under the FMLA definition, but the DOL came out and said it's clear what the intent was, and the intent is you have to be able to care for children who need the assistance, whether they're under the age of 18. And so they've broadened the definition of child, and they've broadened the definition of beyond 18 as well, if they are disabled or incapable of caring for themselves.
Okay, and then we had a question about an employee, if they just returned from FMLA due to birth, are they eligible for an additional 12 weeks? The short answer to that is, my understanding is no. It's 12 weeks totally.
Yes.
Not an additional 12 weeks.
Yeah, we answered that, I think, on a frequently asked question after week 1. Go back and look at those. I think we've posted them everywhere. But the reality is that this expands the availability of FMLA leave, FMLEA. It does not expand the total amount of leave you can take. However, I wanted to give one caution. If that person who came back from pregnancy leave only used 6 weeks or 8 weeks, they still have the balance of the 12 weeks, but they're not entitled to any more than 12 weeks. They also can use that 2/3, again, not to exceed the 12 weeks. This does not expand the amount of time you can take. It only expanded the ability to receive leave. So I think at that point, unless there's a critical question, I really want to give the last part of this, Lyle, to Dr. Hood, if I could. I don't want to short shrift. He's got quite a few good questions in there.
Yes, indeed. And thank you all very much, Allison and Jim. Way to go. Good questions coming in. I want to introduce Dr. Hood a little more formally now. I've been relying on him for quite a while for healthcare related information in Central Kentucky. He's been practicing for 25 years. He's only one of 10 Kentucky physicians who in the last 100 years has been designated as a master of the American College of Physicians. And he's the only one of all those fellows who also has been recognized by the Royal College of Physicians in London. He's the past president of the California Society of Internal Medicine, and he's the past governor of the Kentucky chapter of American College of Physicians. So a lot of great background, very active in the healthcare community, and keeps a practice on Southland Drive in Lexington. So Dr. Hood, take it away. And we've gotten a lot of questions over the week, so we prepared some questions he's going to respond to, and then we'll take other questions. Go ahead.
Thank you very much. Sorry, thank you very much. Happy to be here. Presuming you can hear me okay.
Yes, indeed.
Okay. So in all of this, this is stuff everybody's learning on the fly. You know, 6 months ago, if you asked physicians, they knew what coronaviruses were, but they had no idea where we were going to be come April. So using your best judgment to do the best you can, particularly in these next few weeks, is really going to be critical. The updated projections have moved the peak in Kentucky from being in May to late April, I think about 16 days from now, which is good news because that's sooner to get through the peak. The bad news is the latest projections have changed and do project Kentucky running short of ICU beds and ventilators, which had not been the case there before. So in general, we'll run through a few of the questions that I was provided, and then just take the sense of what people are interested in and try and help you as much as we can. The first question, and of course this is changing even over the weekend, is what to do about facial coverings. And I call them facial coverings instead of masks because there is a distinction. There are the medical grade, proven, certified masks, and then there's the variety of other things that people are making in their homes. There's new suggestions coming out on a regular basis. Philosophically, the Eastern nations, China and Japan, etc., had been sort of crowing that they had done better in this epidemic because they were universally using facial coverings in public, which limit the projection of droplets from each person's mouth into the environment. Some of the newer data over the weekend does say some of that may have been a little bit of false promise with some surges in cases that they're having. The Western countries in general have been less convinced, but public pressure has led to the concession that citizens may wear coverings in public if they so choose. And if you think about it logically, it does make sense because they've asked all of us to presume for the next several weeks, anybody that you see, you should act as if they have the virus. And the guidance is if you have the virus and have to be in public, to wear a mask. So there's really no downside as long as people still engage in the key elements: social distancing, hand washing, not touching the face. The N95 masks, being generally unobtainable if you went out and tried to place an order today. Kentucky's government and hospital systems have asked that if you have these in your possession unused, that you donate them to healthcare centers, which are running short. The general consensus is making things, whether it's out of cloth, the new thing over the weekend was out of the blue garage shop towels. They can't hurt, but they may not do as much as people expect them to. Moving on to the second question, sort of the status of testing in the state. The viral testing itself for if the virus is present has been very difficult. And even this morning, Baptist guidance is that it's still, for their testing centers, limited to approved centers and approved providers that vet who actually gets the testing. But the availability of this testing is supposed to be expanding substantially anytime now in the state. Unfortunately, the accuracy of the testing, and this has been a problem with some of the drive-through places, it really depends greatly on the technique of how the person performing the swab does their job. It also depends on how long the patient has been symptomatic, whether or not a negative is likely to be that they never had the virus versus that the viral counts have gone down as the immune system responds, so that you end up with a negative and you're left wondering, did this person really have it? Because they sure sounded like they did off symptoms. This is part of why antibody testing is looking like it's going to be so huge. There are some companies that have announced testing for IgM and IgG COVID-19 antibodies. Those still are not widely available, and they are being prioritized to some of the sicker and most at-risk patients right now. But the antibodies are important because they not only tell us who has had a case, but who appears to have mounted an immunity that it is hoped will last for up to 3 years, although it could be much less. Nevertheless, people that do show themselves to be virus negative and antibody positive are expected to be the best people to go in and reopen shops and reopen the economy with the least risk. The return to work criteria on the antibody test is also a bit contentious, because if you're really going to do this in the sort of pre-coronavirus mindset of it has to be an FDA approved test, it has to be done this way, it has to be certified, that's very restrictive at a time when we're really needing to start reopening the economy, as everybody on this call is well aware of those pressures. Part of the push is also to get widely available, even in-home antibody testing. Again, this is sort of the difference in having an at-home pregnancy test versus having a confirmatory test at the doctor's office on the pregnancy. The fear is if you send out tests, even if we had the ability today to send out an in-home IgM, IgG, COVID-19 antibody test to every adult in the United States, how many would get performed correctly, how many would get returned, how many, if you try and get to issuing certificates for this person is immune, are you going to get into black market forgeries of test kits, of certificates? There's a lot of weeds in this, and that's holding it up some. But in general, the best standpoint we can have is widespread widespread virus testing that lets us maximize our social distance policies, and as the peak wanes, that we lighten up some of those criteria. And if that's bolstered by antibody testing, that will let us move more robustly in reopening the economy with the greatest confidence that we don't have workers that are going to get infected, expose other people, or expose clients. The next question was, what if there's a known COVID-19 case with a person that's been at work? And if you haven't encountered this yet with your business, this isn't an if scenario. This is a when scenario, and is likely going to play out many times at many businesses repeatedly throughout this pandemic until the CDC says the widespread danger is past and they issue different nationwide guidance. Generally, from exposure, people are at risk for exhibiting symptoms within the next 2 weeks from their last known exposure. And that's where the self-quarantine recommendation comes in. Many will exhibit symptoms earlier. Typically, people who are exhibiting symptoms that are going to become severe seem to be doing so by about the 5-day mark. But we're still learning, because this is such a new pandemic and the data we've had from China was so flawed. What is the percentage of patients who, even though they're infected, don't show any symptoms at all? That's judged to be at least 20%. Good chance it's in the 50% range, and it could be higher. And so that's, again, part of why for the next 2-3 weeks, maybe a little longer, we're supposed to judge every person we encounter as having the virus, even though they have no symptoms. It's important because you have enough challenges as an employer to do what you have to do as an employer and not play doctor and kind of make up your own rules. It's best to encourage employees who have questions, or particularly those who have symptoms, to contact their physician. As was said earlier, go ahead and presume and start their self-quarantine then, even if they haven't, even if they're in the process of contacting their physician. If they don't have a physician, the Baptist Urgent Care on Harrodsburg Road is the Baptist System's point for outpatient testing. UK is a prime testing area in this area as well. I looked, I still couldn't find anything specific for St. Joe's. I'm not trying to exclude them, I just haven't been able to find anything. Doing the best you can to maintain privacy and not go to a unit and say, hey, Bob, you know, we sent him home because we think he's got the virus. Trying to be as sensible to the guidelines as was previously outlined, but still proactive to minimize exposure. I think will have to be viewed kindly in the spirit of the pandemic, as opposed to the general liability that previously we had all become used to, and our attorney friend on the call went through very, very well. From their last probable contact, employees need to start the clock for 14 days from presumed exposure to the index case. And the person who is the index case remotely by telephone can be and should be asked to identify all of the areas of the workplace where they think they have been present, what bathrooms they've used, where they went, what offices they've gone into to talk about this. And those areas need to be sanitized as closely as possible within accordance to the guidelines that are published on the CDC's website for cleanings of workplaces and counters and equipment. Other exposed employees from that point of known contact forward should be sheltering in place for 14 days minimum as best practice. And the best process is going to be for them to a contact with their established primary care provider, the one that knows that person, not just their age, but their medical conditions and risks, which again, the employer may not be in a position to know about, and probably for other reasons doesn't want to know about. We're doing quite a bit with televideo, telemedicine. We are working in conjunction with the screening centers and the hospitals to prioritize and triage patients, but their instruction should be to go home and contact us, not to leave the workplace and drive straight to the physician's office, again, because we're trying to mitigate spread and prioritize what are limited resources. Many patients are not going to be symptomatic, but still need to shelter. Many patients that then become symptomatic are going to be able to be managed at home with conservative measures. Those two together comprise most of the patients that our office or any other office is going to interact with. But through direct phone or video consultation, we can then triage and direct patients who need additional testing or additional levels of care, because there are going to be more people that need to be hospitalized and put in the ICU and even put on a ventilator. And we're not done, unfortunately, with fatalities in Lexington, in Kentucky, or in the nation. We have not yet reached the peak yet. The latest update on that was predicted to be now April 21st for Kentucky. And that's, of course, a prediction, so that's a fluid number. Patients should not expose themselves by voluntarily showing up unannounced at medical offices or going by the grocery on their way home to quarantine, etc. The urgent cares hospitals, when possible, should have who gets directed to them triaged by the outpatient offices by whatever protocols each office has set up. But Baptist and UK are our main directions for additional testing in Lexington, U of L and Louisville as well. Baptist, if you're not in Lexington or Louisville, has, I think, 5 other sites designated in the greater population areas. And those are addresses and contact information are available on their website. And there are probably going to be some other options being expanded on shortly. Of course, when we start talking about people being in the hospital or the ICU, the discussion goes to treatment. Should a patient become infected, conservative measures, rest, if they've been directed, vitamin D, vitamin C, other measures that we're advising our patients in our practice should be pursued, as well as symptom-based over-the-counter treatments. Those are the mainstays. There is still a lot we're struggling with what really is effective treatment for patients that have moderate or severe or critical illness, because of course a lot of these have been proposed and they've been talked about a lot in the media. None of them have been vetted to the point to be FDA approved and recognized treatments. That doesn't mean we don't use them. It just means don't over rely on these. The studies for hydroxychloroquine and chloroquine are very small. The Chinese studies are actually based on some methods of data collection that are kind of ridiculous and would not get published in any peer-reviewed medical journal under any other circumstance. The studies out of France looking at the combination with azithromycin are a little more supportive, a little more promising. Some of the anecdotal experience we're getting in this country, are supportive as well. But these are medicines that are not without side effects and risks. And we've already had cases of patients dying or becoming severely ill taking these without physician direction. Certainly the chloroquine that's used in aquariums should not be used. Heart patients need to be particularly careful because there are things that this virus does to attack the heart, but there are things that chloroquine and azithromycin do to change how the heart works electrically as well. So you can see why having the guidance of a medical professional and potentially additional testing before starting these will change. There are going to continue to be new sets of advice about treatment. Ivermectin, which is an antiparasitic that's known to have some antiviral activity, came up over the weekend with some suggestions from Australia. That doesn't mean stop giving your dog his flea and tick medicine and start using it yourself. We don't know the dose, how to use it, what schedule. There's still a lot we're working through. We're doing it really quickly. And the volume of actual journal publications in good medical journals since this has come up in 2020 is actually astounding. The medical community is communicating very well on this, but there's still hospitals that aren't ventilating critically ill COVID-19 patients that need to be on ventilators correctly. they're still using the wrong settings. They're still using the wrong positioning of the patient for what we think now is best practice. There's still a lot of scrambling and catch up happening, even for those of us who've done this for decades. So whenever your patients, whenever your employees have questions, direct them back to us. And yeah, we're busy, but we're busy giving this sorts of advice and treatment. It's what we're here for. And we'll do the best we can with what we know as of April 6th or April 10th or what have you. And still, the supplies on a lot of these medicines are so short, we can't even apply them to our most critically ill patients. I know there have been pharmacies in Lexington that just on a prescription have been doling out these medicines, and people in the community have been hoarding them or taking them prophylactically. Right now, that's still taking medicine out of the mouth of somebody in the ICU. And it's still not proven, and it's not necessarily safe depending on the individual's own medical health. The big discussion and when we can really breathe easy on this is not when there will be enough community-based immunity, because that's a number, again, that we don't know until we have widespread evaluable testing. But it does get to another question, which is that about vaccine. The one thing we've learned in all of this is doctors that research and produce vaccines are really optimistic people. And so we end up every few days with a big announcement that somebody's really close to releasing a vaccine, and it's going to have 1 million doses a week available before the end of April, and Lord willing, that becomes true. There are more than 15 separate vaccine development efforts going on right now at different stages in process and using different techniques to try and target this virus. If successful, they may even also reduce the risk of the common cold, which is 1/3 of cases each year, or other milder cases of coronavirus that have been around humans a lot longer. They may also help us prepare for the next pandemic, which may be another coronavirus mutation, could take on other forms. There's a lot we can talk about in terms of global policy and politics to reduce the emanation of these viruses from China and the way they conduct their grocery shopping and other approaches. But for right now, everybody's working as hard and as best they can, as well as including the people on this call. So I hope this has been helpful to say a little more about where we really are, as opposed to what some of the news outlets or conspiracy sites or other places may be putting out there. And in the time we have left, if there are other questions, I'm happy to give the best answer I can, like our attorney friend said, with what we know on April 6th.
Dr. Hood, thank you very much. And some of the concern we've gotten expressed from people while you've been speaking is, are you okay? And thank you for all you're doing, particularly for being on this call, and people just concerned for our frontline defenders, and you're certainly one of them.
I appreciate it very much. And we've had a lot of outpouring and good support and well wishes and prayers from people, and that's very much appreciated and very humbling. Anybody that's worrying about my voice, I had surgery on it in medical school, so it always sounds like this. But I'm doing fine, and our employees are, and we're being as careful and proactive as we can. And so I appreciate that.
Dr. Hood, I just wanted to reiterate and thank you for the time that you've taken, because this is you are on the front line, and we truly appreciate it. And we can't thank you enough for the effort you're putting in, day out, you and everyone else. Is there anything, I mean, we hear about the masks and the respirators and so on. Is there anything that rank and file Kentuckians can do to assist the local hospitals? I mean, anything that any of the businesses or otherwise?
Sure. I thought there was a very well stated plea that came out on Saturday from the governor, saying if you're in manufacturing in Kentucky, and even if you manufacture something radically different, but you think there's something, not just masks, be it gloves, or we call them gowns, the whole body kind of protective equipment you see, that you think your company can manufacture, call the state government, have a conversation with them. I'm amazed how often still there are mass donations of supplies. There was a report I saw when I got to work today. I forget who, but a company donated 10,000 N95 masks. There are some protocols for sterilizing these masks while they hold up to be reused that we're trying to use. So I would say, and again, this is off what we think we know today, if you personally have an N95 mask that you already had used, it was something you used at home when you were working on projects or such, and you want to recycle it, we can't provide that right now to a medical facility unless they change that. But there is some guidance from some sectors that taking N95 masks, using wooden paper clips to clip them on an oven rack in a home oven, preheated to 158 degrees Fahrenheit and kept at that temperature for 30 degrees, may inactivate coronavirus that's on that mask, and to let it be suitable for reuse.
I think that was 30 minutes, right? You
30
told me
minutes, what did I say?
30 degrees.
I'm sorry.
158 degrees.
158 degrees for 30 minutes. So
hanging from the rack with a
right, so that the mask is not touching the metal grates above or below, and you're not suspending it from the elastic so that it'll still fit. So if you've got masks that you're already using and you're not sure where you're going to get more, you can try that tip. Again, it may be better than nothing. In the long run, that may be disproved, but there is some science behind 158 degrees Fahrenheit for 30 minutes, as long as the mask doesn't contact the metal of the oven.
All right. Great input. Allison, any other questions?
We've got a couple about the paycheck protection stuff, but we can follow up on those by email if we need. We don't have any healthcare related questions or health related.
All right.
That's great.
I think we're close enough to the end. We're close enough to the end, Lyle. I think we ought to wrap it, and I'll do a frequently asked with the $600 and whatever else we come up with.
Okay. Sounds good. Thank you all for joining us today. We really appreciate it. Allison, for your work, and Autumn and Chase, Jim and Dr. Hood. Way to go. I think we'll probably end up doing this again next week. Is that what you're thinking? And we'll let everybody know. We'll let everybody know. And we've gotten some good feedback here. You all have a wonderful day. Holler at us during the week if something comes up that you want some help with. And we look forward to having a healthy week, and talk to you next week. Thanks a lot.
Thank you.
Thank you.